The Philippine Stock Exchange Index or PSEi remained stalled below 6,500 points in January, as there is no signal of economic recovery in the horizon. The 4.4% gross domestic product or GDP growth for 2025 confirms the fact that the Philippine economy is in bad shape. In contrast, the full year 2024 GDP growth was at 5.7%. Among the factors for the low GDP growth in 2025 are governance issues, particularly the flood control scandal, and slowdown in domestic consumption. The peso also struggled against the US dollar. This is what Department of Economy, Planning and Development or DEPDEV Secretary Arsenio Balisacan said. Admittedly, the flood corruption probe scandal weighed on business and consumer confidence. And while inflation remains under control and initially boosted investor sentiment in the first 10 trading days of January, stock market investors were seeking for other good news to take more bold positions in acquiring publicly listed equities. In summary, the PSEi opened at 6,135.06 points on January 1st, and closed at 6,328.97 on January 30th, for a 3.16% increase over the month. The highest close of the PSEi was at 6,487.53 points on January 15th and the lowest was at 6,135.06 on January 1st. The first 10 trading days at the Philippine Stock Exchange saw the index surge by 5.74% from 6,135.06 points to 6,487.53 points. During this period, investor sentiment was boosted by the below 2% inflation in December of last year. This is what Philstocks Financials Incorporated said in a report on January 16. The local market rallied further as investors continued to hunt for bargains with optimism fueled by the Philippines' December inflation print, which remained under control. And surprisingly, the lowest close of the peso to the US dollar was on January 15, or at 59.50 pesos to a US dollar. The Bangko Sentral ng Pilipinas or BSP maintaining its target reverse repurchase or RRP rate at 4.5% as of its last policy meeting in December 2025 also boosted slightly investor sentiment, although a rate reduction was what investors were expecting from the BSP. However, even with the good showing of the PSEi in the first 10 trading days, there was still uncertainty over the full year 2025 GDP growth, as the shadow of the 4% GDP growth in the third quarter of 2025 loomed large over the market. Eventually, the PSEi started to hover below 6,400 points from January 20, closing at 6,352.86. And when the 4.4% GDP growth for full year 2025 was announced on January 29, the stock market index went below 6,300 points for the third time in the same month, settling at 6,223.36. This is what Philstocks Financial Incorporated research manager Japhet Tantiangco said. The local market plunged as investors digested the Philippines' disappointing fourth quarter of full year 2025 GDP print. Moving forward to February, market investors are hoping that the BSP would make another rate reduction, and that the peso rate to the US dollar will remain below 59 pesos. The peso closed at 58.94 pesos to a US dollar on January 30. Also, bargain hunting has been prevalent during January, as there were investors who acquired stocks that were bargains or priced below their market value. Bargain hunting helped prevent the PSEi from sliding further amid the challenges in the stock market last January. One good example was on January 30, which saw the PSEi go up by 1.7% to 6,328.97 points. This is what Philstocks Financial Incorporated said in a report. The local market bounced back as investors hunted for bargains with hopes pinned on another possible rate cut by the Bangko Sentral in Philippines. This comes following the Philippines' dismal fourth quarter 2025 GDP report. Also, an inflation rate of below 2% in January will help boost market sentiment in February. Resistance is seen at 6,500 points while support is at 6,300 points.